morning. Another day, another dollar, another. Survived another night in the cold. Welcome to the show, everybody. Make sure you're subscribed if you're new here so you can chat on the stream with everybody. And welcome back to the show where I drink questionable energy drinks instead of coffee and make even more questionable financial decisions. There's significant risk of loss when you trade. So let's talk about a miracle drug. A real, honest to goodness, 21st century miracle type thing. For decades, we've been told the same thing. Eat less, move more, burn more calories than you take in. Simple, right? Just put down the donut, go for a run. But what if you could eat a donut, have it, eat it, enjoy it, and not have to do the run? What if you could just take a pill or injection and watch the pounds melt away like a snowman in July? Well, welcome to 2026, right? I mean, the age of GLP-1s. We now have the pill that you can just take, solve all your problems. Ozempic, Wegovy, Mounjaro. These obesity drugs, right? They're everywhere. Your neighbors are on it. Your aunt's on it. Your dog probably trying to figure out how to get on it so he can eat more dog food. And for a while, it seemed like we'd finally done it. We figured it out. We cracked this nut. We figured out the holy grail, how to lose money, how to lose weight. The market on these drugs is exploding, set to hit $200 billion by the early 2030s. But think about this a moment. $200 billion in one line of medicine. That's bigger than the entire global market for vaccines for these drug companies. This isn't just a new drug. This is a whole new drug economy right here. But here's the thing about miracles. They always have a price. And this one, there's a doozy to this one, because while Wall Street's popping champagne and celebrating the death of donut industries and snack foods, and we see it all over, thousands of people are lining up to sue the companies that make these miracle drugs. Some of these stories are stories of nightmares. I've kind of warned about this, and finally we're starting to see some of the side effects creep up here. Talking about things like stomach paralysis, permanent blindness, and in the immortal words of one plaintiff, my colon literally exploded, blew up. So what do we savvy traders do in the face of this? Do you bet on the miracle, or do you bet on exploding colons taking it all down? Today, we're going to dive into the great weight loss gamble. We're going to look at why Goldman Sachs is saying, buy the dip, while patients are screaming in agony over internal organs exploding inside them while they're taking their grandkid to school. And we're going to find out the investment opportunities hidden in the chaos. So grab a Monster or maybe your favorite warm drink, coffee, and let's get into all of this. So starting out with the bull case, the everything's awesome. Everything is awesome. Let's watch the Lego movie. And who better to tell that story than our good friend at Goldman Sachs? Just this week, Goldman Sachs analysts came out and said, hey, the recent 71% collapse in Novo Nordisk's stock, NVO, this is an opportunity to buy the dip. 71%. I mean, that's not a dip. That's a plummet into the abyss. But this is Wall Street, where every crater is just a future swimming pool filled with money, like Scrooge McDuck. And you know what? Might be right here. The logic's pretty simple. I mean, the market is just absolutely massive for this. I mean, we're talking about a whopping 12% of American adults are already on GLP-1s. I mean, we're talking 30 million people here already, have us a prescription for this stuff. And Medicare now going to cover it. That number probably going to go higher since, hey, seems to solve a lot of health problems, get people off of diabetic medicine that's a lot more expensive. And Goldman's own research team is predicting at least 25 to 35% more sales growth than what the rest of the Wall Street analysts are expecting. I mean, they're not just bullish, they're practically expecting a moonshot off of this stuff. Now, number two, you've got this beautiful valuation gap. You've got the two kings of the obesity drug market, Eli Lilly and Novo Nordisk. Eli Lilly trading at a forward PE around 40 to 50, basically because they have the facilities in the United States to make these drugs. They're not subject to the 100% import tariff on drugs. I mean, they're the prom queen, prom queen, prom king, prom master all in one. Star quarterback. I mean, they can do no wrong right now. And then you've got Novo Nordisk, the company that basically invented the market here. They were first to the market, trading at a forward PE of just 16 to 18. I mean, when you look at it, they're kind of the nerdy kid in the corner who just happens to be a secret genius figuring this stuff out. And Wall Street loves a good comeback story. So Novo Nordisk is practically a Hollywood script waiting to happen if all the pieces come together for them. 2026, it's the year that's supposed to come together, at least if you listen to the Goldman analysts. Novo is rolling out a new Wegovy pill. No more injections. People that don't like needles, you can just pop a pill. Game changer, right? Eli Lilly is expected to get a pill. I'm not even sure I could say it. Oral fluorogorfin or something like that. It's supposed to be approved later in the year, but competition's already heating up. Novo's already on the market. You can get it at Amazon pharmacy. The competition, I mean, it's juicy here. But the pie is so big that it doesn't even matter. Everybody can get a slice and still lose weight. Even Pfizer and Roche are jumping in on this bandwagon. They're spending billions of dollars to acquire smaller companies with promising GLP-1 modifications so they can get in on the game. When the big boys show up with their checkbooks, well, party's just about to get started in a big way. So, from a purely financial perspective, this party is beautiful. It's great. It's a money-making party. A massive, growing market, clear valuations, a bunch of catalysts on the horizon. What could possibly go wrong, right? And that's we take a second here. I mean, think about it. Think about it, right? What could possibly go wrong? What did I say a minute ago? Almost forgot, about those exploding internal organs. So while Goldman is busy drawing up its own buy orders for, setting up the moonshot, we've already got 4,400 people who have drawn up a lawsuit. And these aren't, typical like, oh, I was stubbed my toe on the way to the fridge and I'm suing for emotional distress type lawsuits. These are actually graphic, nasty medical lawsuits. We have a fellow named Todd Engel. He's a truck driver from Maryland. He started taking Ozempic to manage his diabetes. 4 months later, he woke up and he couldn't see out of one eye. A few months after that, his other eye went dark. He's now legally blind, lost his job as a truck driver, lost his driver's license, his entire way of life, all because he wanted to get his blood sugar under control and wasn't told about blindness being a potential side effect. Or how about Jo Helen McClain from Oklahoma? She went to lose a few pounds, feel a little healthier, took some Wegovy, lost 40 pounds, and then her colon literally ruptured, just blew up, while she was taking her grandkid to school. Emergency surgery, sepsis, and now she has to live with a permanent stoma. All because she wanted to lose a few pounds, feel a little better. And then there's Robin Smith from Louisiana. Her husband says she developed permanent brain damage after months of nonstop vomiting while taking Mounjaro. I mean, you would think if you take it and you puke, you stop taking it, right? But I don't know. Doctors call it Wernicke's encephalopathy. What a word. What a two-word syndrome. Anyway, her husband calls it a living nightmare. I mean, these are just 3 stories of more than 4,400, and it's only growing right now. 75% of the lawsuits allege something called gastroparesis, which is a fancy way of saying that your stomach is paralyzed. The food just sits there, rots, and causes problems. 18% allege that they've had intestinal obstructions because of these. And then there's the gallbladder malfunctions and injuries, the vision losses, the brain damage. I mean, these are side effects. The drug companies, of course, we've done nothing wrong. They say the risks are all on the label. And sure, if you squint and read the microscopic 30 pages of print, you might see a vague warning about gastrointestinal adverse reaction, but what does that really mean? Does that really cover that your colon might explode or your stomach might be paralyzed? I'm no lawyer, but I think that maybe the language isn't exactly clear. Now, the first big trials for this are not actually going to make it to the docket until 2027. And lawsuits like these can drag on for years. And then you have appeals, and I mean, the lawyers are estimating a total cost could be $2 billion, and that's a lot of money, even for big pharma. And if a jury decides that the companies didn't do enough to warn people, well, that number could get even bigger. So here we are, caught between a $200 billion miracle and a $2 billion legal nightmare that has no real cap right now. So what's the play? Do you invest in a story like this? I mean, how do you take advantage of it? Well, we have a couple options, as always. First, you can play the big 2. I mean, you can jump in, get some exposure of NVO, Novo Nordisk. You know, it's beaten down. It's a value play. When you compare it to Eli Lilly, if the lawsuits turn out to be manageable and the Wegovy pill is actually a hit, that 71% could look like the buying opportunity of a lifetime. Or you go with Eli Lilly, the expensive but dominant momentum play. I mean, it's a safer bet, but you're paying a premium for that safety. Second opportunity might be these up-and-comers. Companies like Pfizer, their stock is absolutely beat down on the back of COVID. You got Roche also getting in the game. They're late to the party, but they've got some deep pockets, and they're hungry for a piece of this GLP-1 money. Then you've got some smaller, high-risk, high-reward type biotechs like Viking Therapeutics, VKTX. If their drug actually hits, if it actually does what they think it can do, it might just dwarf the GLP-1s. Or if it's a miss, it could go to zero. It's a roll of the dice, but payoff could be huge. Then you have the, we always talk about picks and shovels type plays. During any gold rush, the people who get rich are the ones that sell the picks and shovels. In this case, that means the contract manufacturing organizations that actually make the drugs for the drug companies. It means the companies that make the monitoring devices, the diabetes monitoring devices. It means the telehealth companies that are prescribing the drugs. They don't care who wins the war. They're just happy to sell weapons to both sides, all the sides, everybody that wants to get a piece. And finally, you've got the short side. If you think this whole thing's a house of cards waiting to collapse, you can bet against it. And Goldman has actually created a basket of stocks they call the global unhealthy lifestyle basket. It's who's who of companies that are getting absolutely crushed by these obesity drugs as they work. And it's a who's who of companies. I mean, we're talking junk food companies. We're talking alcohol companies. We're talking tobacco companies. These GLP-1 drugs, it's funny. They're not just lose some pounds. It's actually a anti-addiction type medication. So anything you kind of have impulse control taken on. I mean, but the basket also includes fast food chains and plus size clothing retailers. I mean, it's a dark way to make a living, but shorting the industry that's getting pummeled might be a way to make some money. So there you kind of have it. That's kind of a summary of the weight loss situation here in January 2026. It's a gamble. It's a story with heroes and villains, miracles and tragedies, billions to be made, billions to be lost. It's a story of our deepest insecurities and our most desperate hopes to lose a few pounds. It's a story that's going to be playing out in the market for years to come. Me, I'm not telling you what to do. I just sit here and drink my Monster, watch the chaos unfold. But I'm going to say this. If you don't believe the markets are crazy, well, you should. I mean, the one thing you can't afford to do is be naive when you're out here trading these things. Do your research, understand the risks, and for the love of all that's holy, read the fine print on the 30 pages of disclosures that come with the drugs. I mean, have an AI read it to you at least. And that's all the time that we have for the monologue here. Let's check out some charts and see where we have some opportunities to make some money today. Jumping over, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos. If you trade with real money, you might lose that real money. I'm just a guy on the internet. I make calls. I make predictions. I don't have a crystal ball, but I got a bag of unicorn dust that I sit here with. There's people that you can hire and consult to give you personal financial advice. I'm not one of them. I'm just a dude on the internet spouting off bullcrap. And I get lucky. I make money. Maybe if you do the things I do, you can make money too. I post my real live results on KInfo. Just here's my real live trades, real live results, verified, all 100% verified. Closed trades, new all-time high right here on the account. So make sure the people you follow, right there, look at that, $60,000. Beautiful. Beautiful, beautiful. So I actually do trades. I actually make money in the market consistently. And I try to share it with you. But can you do what I do? Can you do what I do? I don't know. Tesla, look at that. Is that the dip? And now we're going to get the rip. It's kind of what I was predicting coming into earnings. A dip and a rip. The market pricing in that kind of move for earnings, and we stayed right in the middle. If you tried to play an earnings rip or dip, probably getting ripped or dipped. Apple, interestingly enough, was bouncing a little bit overnight, but disappointing U.S. sales. Surprised on a big bump in China sales. Doing nothing, sitting on the roadmap line. It's this daily roadmap line. If you wonder about this thing, just go to the channel homepage, click the logo underneath me, go to the channel homepage, watch the video there. I give you the code for the indicator for free, tell you how it works. But if you just want an easy button to put it on your chart, links in the description. $5. That's probably the cheapest thing I offer right there. And if we get below that roadmap line, support resistance right there, we can see this thing dip on off down in this zone. Now, if we can bounce, we get above this resistance zone up here around 270. 295 would be the upside. Not sure which way we're going at the moment. It's an indecisive zone. Here's what the market was pricing in. We're sitting right in the middle of the zone. Again, if you had played long or short, you got screwed on an earnings move. Doing absolutely nothing. S&P overnight dipping off a little bit. Broke down, as I mentioned. Wow, look at that. Government shutdown coming. And is it going to cause chaos? I don't think the market really cares about a government shutdown. We kind of proved that back in October. Now, it does weigh on us because we don't get all the great financial information that we, love to talk about and blah, blah, blah. This could already be played out, though, right here. We came up, we hit resistance, we dived on down. You look at the high, the low, the high. We took it down to a 1618, which was good. And we came up and overlapped right there. So it's either a diagonal or this is a potential 1-2 reversal. So which way do we bet, right? If we get through this high right here, that's a 3-wave retrace, by the way. If we get through this right in here, probably coming on up new all-time highs on, this is the S&P 500 futures I'm looking at right here, because the overnight action is not going to show this. It's just got to show if you go look at the cash index, we don't have that overnight action to look at. So go look over here. We have the dip off, but we have a gap showing up in here. So is this enough to rip us higher? Was this retrace deep enough? 618. It's a beautiful potential. Got the gaps in here, missing information, but if this launches off, we could see this pushing us on up in this zone right in here. So again, that high, put your alert right up there around 7,000, get through it. Upside potential on the smaller fib line. Resistance, we may see some resistance up here around 7,016, 7,030, possibly 7,070. We may ping pong in there, grind around on our way up here to those kind of levels. Now, this is starting to get long in the tooth without a bigger retrace, and a caution on that. NASDAQ, also, look at that beautiful bounce right off the 618 there. Has not gotten through the 15-minute roadmap line, though. Still downward pressure. Same up here. Still downward pressure. This thing pushes on down. Be careful. Be careful. Let's check out the calendar. We had... And we have PPI coming out this morning. Interesting. FOMC was Wednesday. Nothing on Thursday. PPI. It's always weird when they put out PPI ahead of CPI. Look at that. Those went up quite a bit. And why did they put it out the last one? Like, that's weird. And we get the average hourly earnings next week. That's weird why PPI came out the last day of the month. It's strange. Usually it's all jumbled all together. And we get the PPI and retail sales all together. So weird. I came in pretty hot on the core. Really hot. So we're seeing producer prices increase for some reason. It's usually a front runner 6 to 8 weeks before it shows up in CPI. Usually see PPI popping 6 to 8 weeks before we see CPI popping. So that's a forward indicator. Market doesn't like inflation. That means potential higher rates, but the rates have nothing to do with the prices. So anyway, we'll come back to those and give some estimations here in a minute. The Russell here, small caps. Was that enough of a dip? We got about halfway to where we would need to be for this head and shoulders if it played out. If that was plenty enough right there, back tested that fib line, so that can take us on up. I've been suspecting that we would go on up and hit this 3100 fib line up here. Very often we see this ping pong like that if we're going to continue higher. So we break back through the high we had from a couple days ago, probably coming on up to 3100 for the next stop. Now it probably won't just go whoop. It'll probably do choo 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 choo, something like that. Oil breaking out. Look at this, trying to push through that downtrend of highs that we've had intact for years. Since this high back here in 23. Pushing down, pushing down, pushing down. Retesting the breakout once again. If we can stick it, probably coming up to 100. That'll be a big upside opportunity on UCO for leverage or just USO. Either way, if we're going to stick the breakout. If we reject, probably coming down here to the target, down around 50. We've rejected lots of times in the past. There's no reason that I'm expecting this time to be any different. That's 1, 2, 3, 4, 5, 6. 6 rejections. What do I expect? A rejection. It may even come up a little bit. So I need to prove we're going to break out. Like right back here, it tried really hard and got rejected pretty hard. So we need this to stick. So far, we're not sticking. We're having a lot of trouble getting through this trend line. If we don't get through it, even though we're above the 200-day, we may take it right back down. Gold getting a bigger punch in the face than we got yesterday. I've been warning about this for quite a while. But you look at where we started out Monday. Just took the week back. What goes up came right back down. All the way up there. That was a 12% up and basically a 12% right back down. Be careful out there. It's going to be volatile more than likely. We needed a bigger flush out. And this came back to test that fib line. On the grand scheme, we're at the 2618. We tried to push through, kind of testing it. And 8900 is the next fib line up there. If we just go rocketing off, that's the next line up there. Craziness. Be careful when you're chasing a crazy market, though. Things can turn around and bite you, especially on a pullback. Probably coming back for a 4-hour test would be my guess, but maybe the 1 hour is going to be good enough, but we're below it, so 4-hour might be where we're heading. That could be done at 4,700. Been warning about a bigger pullback for a while, over and over and over, so be careful here. This might be the one that takes us down pretty big. A daily roadmap line touch down at 4,000 would not surprise me one little bit. That would be a massive pullback. Talking about the biggest dollar value pullback we've ever seen in gold. But just a 29%, not that big. Bitcoin continuing to try to push down. Funny enough, somebody might have mentioned this. This was bearish price action. Trying to continue the flush here. We got all the way down almost to a lower low. Almost. I think we're still set for doing it. I think this little bounce is just a little bounce on the way. Target zone's down here in the 70s, maybe even down to 75, possibly down to 72. We could bottom out in a 75 to 72 area. But that's where I expect to go. Probably take a few more days to get there. Might happen over the weekend. We could spike down there and be right back up here by Monday. That's what it looks like, though. This is bearish price action. Be careful. NKD just grinding in place. Lower highs, higher lows. It's kind of a watermelon seed squeeze at this point. Unclear where we're going next. Running out of runway, but we could churn in here a couple more days. Couple more days. So we'll see. No clear. This is the most unreliable price action. Either going to lead to a minor pop, probably up in the 56, or a drop down to support down here around 47. Big range, but that's my global liquidity indicator, and it's unclear. So dollar continuing the churn here, probably going to pop up to about the $97 area. Could go a little higher. We don't want to see it overlap this low right here. If we do overlap that, then it tips the odds that this low is the low and we're done on the downside, and we're going to see some rally. Rally puts down pressure on gold and silver and oil and all the other commodities. So this right here, the dollar continuing to rise off the lows, is putting down pressure on gold and silver. If we see the dollar get continuation lower, we'll see gold and silver rip again, more than likely. Apple, we already covered. Amazon, sitting here at the 618, did not make a higher high at this point. Look for this to, now this bounce right here, probably ran its course. We have earnings coming up next week. Look for this to hold, and 265 is the target. This activated the entry back here early in January. And the target, 75% likely, is right up here. Now, Amazon tends to trend. It has not a statistical population, but when this pattern fires off on Amazon, 95% of the time it tends to work out. Even though it doesn't have a statistical population of 30, but 95% of the time it tends to run on up. That's evidenced by my algorithm right here. 95.8, 36 on the profit factor. It's got 24 trades, so 6 short of a statistical population. Not too shabby right there. We'll see if it can actually hit the target. Google, staying high here. We have earnings also coming up next week on Google. If we pop 385, but the risk for a drop is elevated here. We haven't been down to the roadmap line since Liberation Day almost a year ago. And we could see a larger retrace take hold on Google. It has been the catch-up, though. It's been kind of depressed from the rest of big tech, so it's having its day. Meta, this is getting close to the breakout here. If you didn't grab a piece, we may come back, retest the roadmap line one more time, but it's not a guarantee. This thing's probably on the path to 1100 to 1300. Could take a few years to get there, but rock and roll, baby. Microsoft on the path to, now this, maybe, possibly that was the bottom. That was close. Close enough for me. Doesn't have to touch this line, but we touched into the zone. Zone was 418 to 420. That low yesterday. Right down there, 421. Close to darn enough. When I was predicting 420 from up here, close a darn enough, within $1. This thing can bounce. Resistance right up here at the roadmap line. but there's no guarantee yet. Like right now, you'd be catching a falling knife. It can come on down. It can even push down into the 385 area. No guarantees here, but starting to be in a zone where Microsoft can find some support. Support should be showing up unless we're going to get a bigger, deeper swing down like Netflix has here. Netflix hunting for support, just keeps grinding it lower. You know, we found some support here and then pushed down into it, and then now we're at the bottom of the box grinding for support, and if we don't hold it, we're coming down here in the 60s on Netflix. It's like clear error down to here. Be pretty nasty on the retrace for Netflix. Nvidia has resistance at 195, has not been able to break through it since back at Thanksgiving. Pushed into it, tried again, trying again. We reject off of this. Roadmap line is support. If we break, see, did I recover it? Hopefully I reconnected. The broadcast software crashed. That was weird. There we go. And my browser's hung up too. Cool. Everything is awesome. Let me see if I can reset Google. Oh, cool. Using all of the memory. Let's see. Can I get it to restart? Or is this thing going to take the whole thing down? Fingers crossed. And get it back up here. That was cool. I mean, everything went blank. Like, I was just sitting here talking, everything went blank, like black screens. And I guess the graphics card took a puke. Yeah, there's... All right. What was I talking about? I was talking about NVIDIA. And there's the screen share back. So NVIDIA, resistance up here at 195. We break through the roadmap line. Retesting the breakout from back here last year. Right in there. That would be the thing to watch on NVIDIA. And Tesla, of course, was that dip close enough? We didn't actually touch the roadmap line. There's still potential we come down there and hit it. But that may have been close enough. Sometimes in this game of trades, I guess you might say, it gets front run. It's close enough. So, I don't know. Now, I go pull gainers, things moving up $2 or more in the pre-market, things moving down $2 or more in the pre-market. There were not that many gainers, but there were a ton of decliners with gold getting punched in the face. So be careful on gold stuff. Copper. I mean, we're seeing a fleece out in a lot of this stuff today. Just a bit. It's been pretty lofty. Get a pullback. Just kind of makes sense. The thing you want to watch, though, is does this spread? Does it get out of control? AMD, we're looking for this to come back down and touch the roadmap line. Make a lower low would be the most ideal thing that happens. Doesn't have to. We could just hold a 618 and bounce and go higher. 618 off of this low and that high. So we're watching for supports right in here for AMD. The upside potential here is for about a double on AMD. That's getting beaten down right there. Probably coming down for a lower low. Let's see. Other opportunity. Yeah, all the metal stuff getting punched. All the Bitcoin stuff getting punched. Look at that. Whew. That one can easily come down in here. that next fib line down. Coinbase getting fleeced. Golly. All these high flyers getting fleeced a little bit. Rio getting fleeced a little bit. And so it's a pullback. PLTR. Oh, looky. That was a lower low. She's going for it. Going for it. Going for it. Man. Sometimes I get lucky. It's just price action. It's not magic. VRT has the upside target 212. Back to the roadmap line. Shopify. Let's see. So this one could be, it did make a lower low. It could be hunting the bottom, but this looks like it needs one more. 1, 2, 3, 4. We might fart around right here for a couple weeks and then dip out and set for a rally on Shopify. Lemonade is elevated, looking for a retrace there. I'm digging in here, looking for opportunities. Oh, that one's coming down further. And XOM, that's a high flyer, be careful. NVIS hasn't triggered the long yet. 156 if we do. So stuff that was set up with daily bounces for the day. Take a look at some of these. Here's the high, here's the low. Entry, target 98. Let's grab the statistics. 25, 80, 1.4. 25 is not 30, but this is running pretty much average. So 98 target, that's a pretty all right one right there. It is in the trade already from back here in November. And it came up just shy of the target. So look for this to pop on up. AFL. Another nice, fairly nice looking one. It's kind of sideways, but it is uptrending. And that was the bigger bounce, which it hadn't triggered, but it did trigger this little bitty bounce because of this price action that was below the roadmap line. 113, 44, 88, 2.6. That one tends to trend. Aflac. And here's the high, here's the low. Entry 5. Now this is low price stuff. It has no history of anything, so be careful. You can flip a coin one time and get tails, and flip a coin one time and get heads. Need 30 to mean anything, so this is just the standard historical average of 75% likely to come up here, but this is low price, so when you put a stop dollar below the low at $3, that's like 30% stop. Be careful. Yikes, that's down at 280 for the stop. And that's a big stop for a potential little pop here. CFFI. I don't look at these before I come live. I just grab the list of these and come live and then look at them with you and see if they look good or look bad. People say that you find this beneficial to kind of go through setups and see what I like and what I don't like and why I think some might work and some might not work. Potential entry, potential target, 80 right there. This is already in it though from back here. Oh no, it hit the target right there. So looking for a new entry right here. I couldn't see that little target right there. It got the target. So looking for a new entry right there. 25, 76, 1.9. 25 is not 30. CRG. This one is in it from over here. It's been nasty sideways consolidation. I probably would just skip this one. But, you know, it's in it in this bounce back here. Look for a 1038 target. And missed it just barely right there. Come on up. A 1066 target off of this bounce. Didn't get dollar below the low. So dollar below the low, $6. I mean, any low price stuff. Stuff under $20. The stop is at $1 is kind of big relative to the upside potential, so be careful. This one looks pretty good. Johnson Controls. 126. I've actually been watching this one. Already drawn on here. Here it goes. 126 target. Right there. 38 trades. Cha-ching. 84% of the time. Cha-ching. 2.4. Cha-ching. All these numbers are better than the average. That's a good one that'll potentially work out. Now, as far as time that this takes to work out, if you're trying to buy options or something like that, 45 candles is the average, all right? That means 50% of the time, if you bought 45 candles worth, and 45 candles is 2 months because the candle maker is not open on the weekends. But 50% of the time, if you buy 2 months at a time, you run out of time. 50% of the time it goes faster, but 50% of the time it goes slower. Now, if you add 3 standard deviations plus 3 sigma to this, it's 150 candles. That's 7 months to cover the 99th percentile. So 99% of the time, you wouldn't run out of time if you got 7 months. But 7 months may be expensive for that small of a move. Shares are generally the way to play on the daily chart. This works on all time frames, though. So I have other shorter time frames that take advantage of fast moves, like Triple Threat takes advantage of day trade moves. Cashbot takes advantage of small swing trade moves. Apollo takes advantage of longer swing trade moves. Echo Trades takes advantage of even longer swing trade moves. This one's already in it for back here. Did not stop out, dollar below the low. Coming back up again. Potential for 12.35, but this is low price stuff. Be careful. Same on this one. Be careful. And last but not least, UNP. And then we'll try to make some predictions on where SPY and QQQ are going to close up the day today. This one, 244.60 on Union Pacific. 64 trades. Look at this, baby. Look at this, baby. 64 trades. That's got a nice long history. 78. Nice. Uh-oh, problems. 8.4. That's a negative profit factor. That means this loses money. The losses are bigger than the wins. I probably wouldn't take it. It might work out, but it might lose you more money than you gain from a winner. You could play it. 75% likely to go up here, but gotta be careful. That one's shown a history. 64 is a statistical population, and it says that it loses money over time trying to get after this trade. So it's not a trender. Well, it is a trender. It does do the trend pullback continuation. It's just when the fails are nasty and lose your money. So it does say a trend pullback continues, but when it doesn't, they're nasty. That's what those numbers tell you. All right, bias for the day. Let's see, SPY. Let's see what we had yesterday. Man, I got that to freaking close. Look at that. Holy shnikes. Went on a tear right at the end of the day, but went right through the potential pin. Right? The last candle. Look at that. Beautiful. Let's go down just another. Let's see. Yeah, look at that, man. The last 15 minutes is the only time it left the pin. It was right there, right into the close. All right, moving over to today. Let's see if we can figure out where this might go today. I've got to, when everything crashed out, it took down bull flow. Let's see if I can load that back up. Love a duck. Probably should close a few things. Let's see. And there's bull flow. BY. So I use this for a gamma heat map. The gamma tool right down here, Gex dashboard. There's bull flow. I pop this up. I call this the gamma bubble right here, where the bright numbers are. Now there's bright reds, these big numbers, and there's bright greens. And then there's dimmer greens and really dark greens and dark reds at smaller levels. The biggest level on gamma is highlighted in blue, which right now for SPY, should be SPY, sitting out there and down there at 680, which is kind of interesting. Usually we see some really big levels, but we're not seeing that today. Maybe here in a little bit we'll get some bigger levels. So it looks like we have the top of the bubble up around 700 and the bottom of the bubble down here around, big level down there, 680. Have to push through some bear levels though, so looks like 684. 700, 684. Let's see. Yeah, 684 is just, we got an expanding range here because of the volatility yesterday, I guess, up to 700. Now, as far as levels go, where might we? So this is kind of like where the art and science comes from. I've watched gamma for a long time, a lot of years, like 4 or 5 years. I've played with this, not on Bullflow, but on other tools, trying to get a feel for. Now, a lot of people think that we pin to the level with the biggest options exposure. That's like the theory of gamma exposure. And that's not been my case. It's not been my experience. We have the most puts out here. But at the same time, I guess it's kind of balanced here today for this expiration. Fairly balanced. Big puts, big calls. But you kind of have to take in the consideration of where all of the calls are, where all the puts are, what level would cause the most pain between both sides. And that's been where I see the max pain. That's not typically where we get the max pain numbers if you look at max pain, but I find that these things pin at the level where you have the biggest chunk of puts below that price and the biggest chunk of calls above that price. And right now that looks like it's somewhere right around 692, 693. Because if we go higher, calls make money. If we go lower, puts make money. So I tend to find that price sits and churns off where the biggest chunk of call buyers lose money and the biggest chunk of put buyers lose money. And this thing changes though during the day, so these levels can move. It's not just a fixed thing. But I'm going to say somewhere around 692, 693, which is just below where we are right now. Let's go with 693 for now. This is how I do it each day. This is how I figure out where we might kind of pin it in here. So even if we take a trip up, I expect us to come back down around this area right now based on the numbers we have here at 1012. Now, as far as QQQ goes, save this so we don't lose it. It didn't save my yesterday's predictions. Let's see what we've got on QQQ. Same tool. Type it in here. QQQ. Come on. QQQ on the search. And kind of zoom out a little bit. See what we got. Zoom back in to the middle of the range here. And Looks to me like 626. Nah. That one's kind of difficult because there's call buyers that bought down in here. Might be 627. Screw that big put level. And that's right where we're sitting right now, 627. Wasn't really looking at current price at all. Now, as far as the heat map goes, if you find this helpful, beneficial, let me know. You can play iron condors and all sorts of stuff on this. Now, look at that big level down there, 620. We can take a trip down to 620. And wow, all the way up to 637 on the upside there. So 637. Expanded range. This is the kind of the expected range I expect us to hang out in today, at least at 10:15. Usually the bubble keeps developing until it starts solidifying up at 10:30. But that's where I kind of expect us to hang out today on Qs. Kind of right around the middle, wiggle in the middle. We could take a trip up and come back down, or take a trip down and come back up, but I expect us by the end of the day to be hanging out right in here. Unless something upsets the cart. It doesn't have to. That's just the way the magic beans are kind of predicting right now. It's based on the levels. Look at these levels. Trying to balance it out visually. Like I can't really teach that. Like it's like you look at this and you kind of sum it, and my brain says, oh, it's kind of the balance point is somewhere right in here, where there's as much purple and as much yellow on the chart together, somewhere right around 627. Hopefully that helps a little bit. As far as the heat map goes, the bubble, this is the bubble for gamma. Kind of spans that gamut there. Trying to get this to pop over enough to see it, but it doesn't like that. So the bubble runs up to here and down to that big level at 620. So that's this pink represents the bubble today for right now. Doesn't mean we can't go up here. Doesn't mean we can't go down here. But the pin level looks like it'd be right in the middle if we do pin today. So, yeah, you got lucky. Glad you got that. So. All right, everybody. That's it. I'll be on Market Masters at 11:30. I'm by myself today, so if you want to come hang out, I'm gonna go through the beer money trade a little bit. NASDAQ, how I've made like $32,000 so far since Halloween on small beer money trades. Have a great day. We'll see you again tomorrow. Or I mean Monday. Sorry, same bad time, same bad channel. Monday we'll hunt for opportunity again, and